see we're ending the day in positive territory.
So we look back, but we look forward as well. Earnings coming from PayPal, among others, coming up as we close out with records again for the Dow, the S&P, and I think for the NASDAQ. Stay tuned for hour 2 of the Closing Bell with Kelly Evans and Company. See you tomorrow, Kel.
But 23,165 is the close, and that's a new closing record high for the Dow 30. Meantime, the S&P 500 also adding about a point on the bell there. That's another record closing high for the broad market as well. The Russell 2000's 1502 still 10 points off the closing high and down about 3 points today. And the NASDAQ Composite down about 0.25%. 6605 with some of those big FANG names weighing on that index today. We'll have more on that in just a moment. Now, PayPal earnings are due out any moment. We're going to have instant analysis of those results as soon as they are released. One of the best performers of late to talk about. Joining me today, CNBC senior markets commentator Michael Santoli is here, along with Stephanie Link, CNBC contributor from TIAA Investments. Welcome to you both. Let's begin with some of today's market moves. There's Neil Hennessy, too. We haven't forgotten about you, Neil, from Hennessy Funds. He's joining the fray today as well. But let's begin with those market moves. The trading day began with what looked like a potential major sell-off in the Dow. It did lose as much as 105 points in the low, but we closed there positive, as you saw. Today's big winner in the Dow was Travelers, which had a nice double beat on its earnings this morning. The biggest loser was Apple, and we will have more on that shortly. Trading at the top on the S&P, the move that I can't get over, a 12% pop in Adobe, and the biggest laggard was United Airlines with a huge move to the downside. Michael, what are your thoughts?
Yeah, Adobe has sort of separated itself from FANG, from everything else, basically. It's just kind of magic with all this visibility in the business.
5 years ago, this company was trading in the low 30s, and it is now at $171. It's almost doubled just in the past year. Yeah,
so it's sort of, like I said, it's its own story. It's not really representative of a sector or anything else necessarily. The overall market, I guess you have to say, doesn't it figure the day that we're commemorating the most violent action in history, the market is almost dead flat. I was joking, if the Dow ended up down 5.08 points today, it would be a little bit spooky. But no, it's just tenacious grinding bid in the market. Really, the selling stopped when overseas markets closed down. This was just sort of a baby step back from risk globally, from China and Europe, but not all that much to it otherwise. We're still overbought, probably still should pull back, but not yet.
Stephanie, we started with some concerns about China. There were some comments about a Minsky moment during the Congress that's going on, but we seem to shake those off pretty quickly here.
Yeah, it felt kind of negative right from the beginning. As soon as we all woke up, right? It was China concerns, Spain concerns. There's an expiry tomorrow, so kind of was a pile on. I think it also had to do with the fact that earnings last night weren't really stellar. They didn't crush. American Express was very good, but wasn't good enough. eBay was fine, but there are puts and takes, and not enough given that it's
United
done.
Call.
Well, United, different story, because that should have been down. Maybe not that much, but it should have been down based on that conference call. We can get into that if you like, but I think the earnings last night has kind of just set the stage. Even United Rentals, very good, beat, raise across the board, but it couldn't hold its gains. So I think we started off negative, and then I think people took a deep breath and said, wait a second, these earnings aren't terrible by any stretch of the imagination. Then you started to see the banks start to rally, the industrial start to rally, healthcare being a really great sector as of late, that started to rally. And I think that's what we've been talking about, this rotation all year long. That's what happened today.
We should mention the move in technology, though. It was still one of the worst performers on the session today. Apple brought it down with a decline of nearly 3%. That's its worst one-day drop since August 10. Neil, what do you make of how poorly these names are trading, even as the market did shake everything off and keep going higher?
Well, Kelly, you're going in and out on my earphone, but essentially just specifically on Apple right now, the price to sales ratios, 4, so you're going to pay $4 for a dollar in revenue. But more importantly, logically speaking, how much more do we need on our phones? And so they come out with an 8 or 9 or 10. I can't figure out any of the apps on my phone anymore. So to me, it doesn't matter. So the revenues are going to have to slow down.
Steph, what would you add to that?
I think no one expects the 8 or the 8 Plus to be anything. It's just an upgrade to the 7. So maybe you get some 6s to upgrade to the 8s if they want to. Maybe.
Crazy question. Should they have just skipped it altogether and just said, no, look at what happened with the 5C and the 5S. The 5C became a distant memory after that.
I think the 8 Plus or the 8S, whatever, it's going to be probably a little bit better than what people are thinking. I think the 8 is probably maybe not so much. But I would have been happy with them just waiting and releasing the X and the 8s at the same time, because now you've got this timing thing. And so on the conference call on Apple's conference call, maybe they have to adjust numbers and expectations based on the timing. But the timing is coming, right? The 8 is coming, and it's going to, I think it's going to be a good cycle. And so that's why you want to own the parts guys, the suppliers, because they will benefit from the 10 or the 8 kind of thing.
And some of those names did move lower today. Not hugely.
They did, yeah.
But they opened down, and then many of them got bid up, for sure.
Yeah, I mean, I think that the whole story behind Apple is what is the sort of natural steady state of upgrade rates, right? So in other words, outside of the big splashy new releases, just what is that inherent amount of upgrades you're going to get because you have so many phones in circulation that just need to be refreshed? In terms of whether they should have skipped the 8, I don't know if that's a big look. Maybe they should have skipped the 7. Remember, the 7 was a halfway point, but they're constantly updating the software.
The 6 was the Toyota
the 7,
Camry.
remember, was like not supposed to be a big total revamp.
But then it did pretty well.
Right.
And so it's just maybe that we are reading too much into these early reports about the 8.
Yeah, I think the issue is you have to de-emphasize the every 2 or 3 year big splashy new phone, and it's just kind of like cars, right? I mean, cars have a new model year every year, but it's not an actual redesign. It's like every 3 or 4 years you might get a redesign.
But just for the Apple stock, I mean, it corrected 10% from the recent highs when all these negative reports started coming out. Then it went from 150 to 160 like that. So to give back another 5 from here, I think that makes kind of sense.
2 steps forward, 1 step back.
I think so, yeah.
All right. The Senate moving along to Washington today. The Senate is expected to vote on its budget resolution this evening. It's a key first step to getting tax reform done. And meanwhile, there are reports that GOP tax writers are considering allowing property tax deductions while still getting rid of the state and local tax break. Neil, what do you make of the moves out of Washington in terms of the impact they'll have on this market?
Well, I really think they'll get corporate tax reform through quicker than they will individual. And if it's explained correctly, Kelly, essentially, if corporate tax rates come down, that means profits are going to go up, which means the stock market is going to go up, which means that the middle class is going to be the beneficiary of it because the rich don't need their pension plans. They don't need their IRAs. What the middle class people do, and so that's what's really going to help the middle class if we can get corporate taxes down.
You think that's going to happen at this point, Neil?
Yes, you keep breaking up, but anyway, yes, I do, because I think it's very important for the economy. It's been a slow-growing economy, but this could really heat it up, Kelly, from the standpoint that it will allow corporations to expand, yet at the same time bring money to the bottom line to increase their earnings. And if it does, their expansion plans don't work, they shut them down and they bring that futures, those earnings back in the futures earnings. So it's really good for corporate America, and it's good for the stock market, good for middle America.
All right, we'll see. Of course, we watch this evening if that whole process can move along. Meantime, we had shares of United tumbling today. That stock was down 12%, and it did come after some weak guidance and a tense earnings call where CEO Oscar Munoz said the airline, quote, dug itself into a hole when it comes to competitors. Michael, this was a rather, I feel like, a curious one today. Just sort of an odd one, don't you think?
You mean the actual stock reaction or just the
whole narrative? It just feels like it changed so much more once we got into the call than we really talked about it all going into it.
Yes, it definitely did. I mean, it was not the reflex reaction to the numbers themselves. Look, I do think that's what the market is very sensitive to, which is that, guess what? Capitalism is the same as it's always been. And when the market's good, everyone adds capacity, and competition causes returns to go down. That's what the stock valuations of airlines are telling you because they look very cheap.
But Americans said it's never going to lose money again.
Yeah, exactly. And that's the hubris that makes them expand and think they have it all figured out. I mean, I'm not going to be, it's not all negative. It's probably a better cycle than there have been past cycles.
It's cyclical.
But when you have United saying, we will not cede market share, that means, you know, lower returns.
What's your read on it, Steph?
I just think that it was so vague in terms of the guidance for next year. They didn't really want to talk about cost trends, capacity trends, margins. And it goes against what they said about at their analyst meeting, you know, back in 2016. So I kind of feel like we just don't know what the path is going to be to profitability, and it's that lack of communication that caused the derating, because people were already a little bit anxious about this management team to begin with, given all that has happened. So maybe they can fix it if they communicate better, but they just didn't do a very good job.
So even if they had come out and painted a picture for next year that was worse, by quite a bit than the street was expecting, you think at least if they got that number, that maybe the stock would have taken it better?
It wouldn't have been down this much. Probably would have been down because all of the airlines have seen a nice little trade higher in the last couple of weeks for sure. So maybe you just would have seen a pullback. But it's that lack of clarity, lack of visibility. Investors just don't like it. It's hard to model. It's hard to figure it out. And I'll tell you, capacity is like a really bad word. When people think that capacity is going higher in the airlines, it's just not a good thing. Not a good thing.
There's United down 12% today, down 18% this year. Let's talk about some of these old media names. The likes of Disney, Comcast, our parent company, and Viacom moved higher today, while Facebook was lagging on the threat of a new bill proposing its ads be regulated. Neil, is major regulation coming for Facebook?
Well, if you look at Facebook, you got a PE of 40, your price to sales ratio of 15. So you're going to pay $15 for $1 in revenue. To me, that's not value. That means you're buying growth. And what growth means is you're buying into something that might or might not happen in the future. So I'd rather go with something more conservative like a Brinks or a PVH or a Thor Industries, something where there's really, really value there that long term you're going to make money. You're just not going to make it overnight, nor are you going to lose it overnight, Kelly.
For a second, I thought Brinks had launched a social media platform, but I'm following you now. Michael, what do you think, especially highlighting the move in old tech relative to what happened?
It strikes me, at least today, as a trading rotation. It's not the market saying, wow, this is a game changer. Facebook and the rest are going to be nothing but new versions of old media. It's a matter of, well, we have to lighten up here. We're taking chips off the table in old media, in new media. The old stuff has gotten beaten up a little bit, and so you can rotate into it. It looks like one of these kind of seesaw trades, each sector on the opposite side.
Well, and so Stephanie, for investors, does it have to be a case of either or? Does it have to be, okay, we're betting on the Disneys and the Comcast in this environment because Facebook could be weakening? Or, do they have to get lumped together, or what do you think?
I kind of like to take a barbell strategy within technology. I want some growth for sure, and I don't think that Facebook's growth is going to decelerate. In fact, I think it's going to be a very good quarter. I own it. I'm actually market weighted, just given the run that it's had. So I appreciate that it would pull back, or some people would take some money off of the FANG trade. And I think that's part, by the way, some of the reason why Adobe did so well, because I think you had some rotation from the growth managers from some of the FANGs into Adobe. However, then I do like, we talked about Comcast last week. I thought that was so overdone on the downside, and I got to find another name because I know this is the parent company, but I think it's a wonderful story, and it's gotten hit very hard, as has Disney, but I do think Disney has more secular problems than a Comcast. Now, I think Verizon's numbers today certainly help the old school of technology, but if I want to find growth in media, I'm going to lean towards the Comcast.
Well, let's look. PayPal sort of fits into this whole discussion here, but their earnings are finally out. Aditi Roy has the numbers now. Aditi?
Hi, Kelly. Those shares are surging 5.5% right now upon some strong earnings numbers. It was a beat on both the top and bottom lines. Revenues coming in at $3.24 billion versus expectations of $3.17 billion. EPS 46 cents versus analyst expectations of 43 cents. It is the 10th quarter out of 10 quarters that the company has beat or met expectations on EPS since it became a standalone company, and on revenue, it's beat or met expectations 9 out of 10 times since it spun off from eBay. Another important metric, ending accounts, net new active accounts, 218 million. The company's saying that's up 90% from year over year. Part of that growth, that's also was a beat on expectations, by the way, and part of that growth coming from mobile payments. That continues to drive growth, up 54% to $40 billion in the quarter. Also, Venmo added more net new active users in this quarter than any other quarter before. Speaking of Venmo, the company just announced this week that it would be expanding Venmo to U.S. retailers, 2 million of them. We expect to hear more color on the call on that, and we will be listening in on that call. Shares again up about 5%. Kelly, back to you.
Aditi, thank you very much. You know, Mike, just to kind of hammer the point again, we've talked about this with Adobe, but PayPal has also doubled. It was trading basically in the mid to upper 30s around this time last year, and here it is popping over $70.
Yeah, it's right at the center of a favorite kind of long-term growth story in payments. It has certainly a central role in the way that payments are going in many different respects, whether it's peer-to-peer, mobile, just the digital wallet story. Expensive stock, as all these stocks are whenever it seems like a slam dunk thesis, but they keep kind of redeeming it. The stock, as it pops after hours here, is slightly above its recent all-time high. So it looks like it was an expected beat, but enough of a margin of victory there that it's worth a little bit of a reflex pop.
Neil, what do you feel about PayPal?
I don't know much about it, Kelly. I just know what I get paid and what comes out of my check, and they get to keep the money for a week or two before they send it off. In the economy, in a slow economy, but it's growing, they're going to do very well because they got a good, nice little niche.
They got Venmo. That's one of those phone apps, Neil. I'm guessing you didn't download that one.
No.
They got Venmo. That's one of those phone apps, Neil. I'm guessing you didn't download that one.
No. I wouldn't know how to do it.
Come on, your kids, your coworkers, they can download it for you. This is market research, Neil. I don't think we've convinced him. What about you, Steph?
These guys are in the sweet spot. You know, they just truly are. To have mobile growth at 54%, to have total payments volumes of 35%, people were thinking 27%. This was a beat, a raise, and a beat by enough to have the stock go higher. So quite the opposite of what we saw last night, where it just wasn't enough.
All right, there's the earnings. Stephanie, Neil, thank you both very much for joining us here top of the hour. We have a news alert on the search for the next Fed chair now. Eamon Javers joins us out of Washington. Eamon?
Yeah, hi, Kelly. Just a few moments ago, Politico posted a report saying that their reporting suggests that Federal Reserve Governor Jay Powell is the leading candidate now to replace Janet Yellen at the Federal Reserve. That's according to Politico. I just spoke to a White House official about that report. The official not confirming that report, but also not knocking it down, notably. And we do know that the president and Janet Yellen spent about a half an hour together here at the White House earlier today, and we believe that that was the last of the official interviews that the president will do before making his decision. We're expecting this decision to come by November 3rd, when the president leaves for a long trip to Asia. They'd like to have this buttoned up by then. The interview process now complete, at least with an initial interview with every one of the 5 remaining candidates, and we'll wait and see now whether the president decides to call anybody else back to the Oval Office for another session, or if he feels he's done enough in-person chatting with these candidates, and now he's ready to make his decision. That's all still to be determined. So we're in a little bit of a gray area here, Kelly.
Yeah, and frankly, I'm not going to believe anything until the president himself announces it with this White House.
Right.
Eamon, thank you very much. I very much appreciate it. We've got some news on the personal shopping service Stitch Fix. John Ford has that story. John?
Well, Kelly, we had known that Stitch Fix was planning to go public, but they have filed an S1, and we've got a bit more information about the company from that. It is planning to go public on the NASDAQ, symbol SFIX, S-F-I-X. Goldman and J.P. Morgan are the lead underwriters. In the S1, which gives some more details about the company, they say that they have more than 2 million active clients and go quite a bit into data science. Artificial intelligence as being the technology root of the business. Of course, Katrina Lake, the CEO, founder of Stitch Fix, well known in Silicon Valley. This is a big deal for this company based on AI and fashion, to be planning to go public and on the NASDAQ, which hasn't been winning all of the IPOs lately, so certainly a feather in the cap for them. Kelly?
That's true, John. Thank you very much. Michael, just quickly, this hits all the hot spots we just spoke about. We had MongoDB against it, but it's not a clothing company, it's an AI company. That's right.
Well, that you have to be.
Yeah.
I mean,
and to their credit, they do.
Closure yesterday and AI is tomorrow. And no, I mean, I think that's going to be, look, this is what IPO rushes in bull markets look like, which is a lot of companies following the similar themes, trying to seize on what's working, and a lot of them get out. I mean, we actually focus on each one of them because it's been so slow in the IPO.
That's true, and we'll see. Stitch Fix, though, SFIX, is going to certainly be one to watch. Well, it was one of the darkest days in the stock market's history. 30 years ago today, the market suffered a crash that became known as Black Monday. The Dow plunged more than 22%. Could it happen again? We will get into that next. Plus, Apple having its biggest one-day drop since August 10th on new concerns about its watch and sales of the iPhone 8. Find out how big of a red flag this is for Apple and its suppliers coming up. And today marks the anniversary of the 1987 market crash known as Black Monday. The market dropped more than 20% in the single session. We also remember this famous remark from financial journalist Louis Ruckeiser when he addressed the crash on his show Wall Street Week back in 1987. Listen.
Just your money, not your life. Everybody who really loved you a week ago still loves you tonight. And that's a heck of a lot more important than the numbers on a brokerage statement.
Not only a great sentiment, but tells you how bad feelings were on that day. Let's talk more about the anniversary, also about whether a crash like that could happen again. Joining the conversation is Ed Clissold from Ned Davis Research and Chris Repke from MUFG Union Bank. Guys, welcome to you both. Ed, one of the interesting points that Black Swan guy makes is the fact that a drop of 22% should never statistically really happen in the stock market, or if it does, it should certainly only happen once. What do you think is going on with the functioning below the surface of the stock market today?
Well, I think that's an excellent point. We're talking about over 33,000 trading days since 1900. And this was by far the biggest drop of 22%. The second biggest was 43% less than that. There's only been 2 trading days in addition to the 87 crash where the market fell 10%. So this really is an outlier. Now, if you're talking about what could potentially be a driver of this, portfolio insurance certainly was a catalyst back in 87. The dark pools and ETFs are the things that are talked about today. But still, you have to keep in mind just how much of an outlier 87 really was.
But, Chris, I guess the interesting point is we've had several drops since then, a magnitude of 7%, 8% in the late 90s if you go back and look. Today, we talk about how calm and placid this market has been, but it's not out of the ordinary, going back to the financial crisis, too, to see a lot of huge intraday swings, right?
Yeah, I mean, it's risk management to go back and look at what happened in October 87 and see, based on your models, are the markets going to survive? Is your company going to survive? So I guess the rule of risk management is if it happened once, it means it can happen again. And, the public can still panic. And if anything, at this point, it was, back then in 87, there was no email. CNBC had not merged with the financial news network that I used to go on with a lot. The internet wasn't there. Right now, the baby boom generation is 50 to 70 years old, and a lot of their net worth is tied up in stocks. I'm just worried what would happen if the baby boom generation panicked and cashed out. And I think it could happen again, certainly. Never say never.
Ed, I've been making the point all day that, yes, it was a kind of a fluky occurrence, clearly some mechanical forces that were kind of undercutting the integrity of the markets on that one day. But there had been stresses building up in the capital markets for months before that. It just didn't come out of the blue into a calm market environment, right? You had bond yields surging. You had the dollar cracking. The stock market itself was down 9.5% the week before the crash. So it seems as if nothing else, if there's even a conceivable day that could be approximately what the crash was, it would probably be preceded by some nasty action as well.
Absolutely. Most market declines are preceded by some sort of narrowing of leadership. The advanced decline line, the running total of stocks going up versus down on any given day, that peaked back in March of 87. Yesterday, it was at a record high. And if you look at bond yields, the 10-year went up 300 basis points in 1987. Today, we're freaking out over a 32 basis point increase in the 10-year. So if you were to take the 87 part out of it and just say, are we heading towards a big peak to a major decline, the signs are few and far between at this point.
All right, gentlemen, thank you for joining us. Walk down memory lane. Very much appreciate it. Ed Clissold and Chris Repke joining us today. Here's what James said on Twitter about Black Monday. Are we reading this? Want to read this? 30 years ago, James said, I tried to cross Montgomery Street in San Francisco. He said it was closed down due to so many investors trying to enter Schwab. So
Back when you had to actually go into the Schwab office if you couldn't get through on the phone.
Yeah, no, excellent point. Apparently that was a difficult thing to do. Anyway, we will take a quick break. Apple shares have rallied more than 30% this year, but they are down sharply today on worries about the iPhone 8. Up next, we'll discuss whether the shine is off the Apple. Plus, lawmakers on Capitol Hill introducing a bipartisan bill to regulate internet ads. How it could impact companies like Facebook and Google, that's still to come on the closing bell. At this hour with Tyler Matheson. Hi again, Tyler.
Kelly, thank you. Here's what's happening at this hour. Defense Secretary James Mattis saying today, quote, "We do not have all the accurate information yet on that Niger ambush." He says it will be released as it becomes available. The U.S. still looking for answers on the attack by 50 ISIS-affiliated fighters that killed 4 U.S. soldiers. Former chairman of Dean Foods, sentenced to 2 years in prison, Tom Davis pleaded guilty to giving tips to Billy Walters, who profited millions off the insider trades. The case also entangled the pro golfer Phil Mickelson, who wasn't accused, but agreed to pay back $1 million he made trading on the information. And massive protests today at the University of Florida. White nationalist Richard Spencer speaking at the university, the school's president rejecting Spencer's comments, but feels obligated to let him speak. And the hottest Halloween costume this year, Pennywise the Clown from the movie It. And I thought it was IT all along. But if you haven't gotten It already, the costume, it may be too late. The costume sold out in some places, in which case there's always Wonder Woman. That's the CNBC News Update at this hour. Back to y'all.
That's you're a Wonder Woman kind of guy for Halloween?
Not me. No. I'm the naughty nurse type.
Okay. As long as you send pictures.
Right.
See you later.
See ya.
Tyler Matheson. Apple is the biggest loser on the Dow today, down more than 2% after several reports this morning highlighted company headwinds in China. Cellular service for the new Apple Watch being abruptly shut off for some new customers. And there's the Economic Daily News saying Apple is cutting supplier orders for the iPhone 8 and 8 Plus by as much as half. Joining us now is Ed Lee from Recode, along with Gene Munster from Loop Ventures. And we appreciate you both joining us. Ed, how much do you think we're making? How much do we know at this point about what's really going on with sales of the iPhone 8?
Well, so you know what? Apple has 3 main sort of factories making all their stuff, and they do that on purpose, partly because they don't want to sort of ally themselves too close with just one. That could be a hurdle or a difficulty down the line. So you do a channel check on any one of these factories. It doesn't necessarily tell you what's happening at the other factories. So I put a grain of salt on some of those concerns. At the same time, personal channel check. This past weekend, I bought an iPhone 8 for my wife.
And why did you buy that?
Well, so hers was old. She wanted to get a new one, and she didn't want the big 10 one that's going to come later. And you know what? They had exactly the color, the configuration, the cell service exactly that we wanted. They had in stock, no problems. So that kind of told me, oh, you know, I guess they've got a lot of these sitting around. Potential positive spin on that, though, is that so people are waiting for the 10, which is more expensive. I actually thought it would be quite the other way around, but it looks like they want the big one.
Gene, how much of a problem is it for Apple if the 8 doesn't sell that well, but if the 10 does?
That'd be a great scenario. Typically, in a cycle, which is over the next year, about half of the phones are the most current version. So this time it's going to be split between the iPhone 8 and the iPhone 10. I think that the early work that we've done in terms of U.S. people and consumers waiting to buy, it looks like almost 30% of those are going to have an interest in buying the iPhone 10 versus about 20% for the iPhone 8. And obviously, this gets to the biggest lever in the Apple story over the next 12 months, which is higher ASPs. And so I think,
average selling price,
don't be concerned. Yeah.
Michael, here's what I'm wondering, though. What happens if the iPhone 10 doesn't sell a blockbuster?
You know, it's honestly very hard to tell in terms of what is baked into the stock at this level, right? It's not as if the stock has rushed off to new highs in the last couple of months and everybody thinks it's going to be gangbusters for the upgrade cycle and it's an expensive stock and there's no room for error. It's not the case at all. Apple always kind of screens out statistically as cheap enough. So to me, it's about not just sort of the next few months, but again, as we were saying before, what is the typical pace of sales as you go forward into this cycle. I think
you want them to report like the auto sector.
I think Apple would love to get to that point where it's not about, is this one going to be a huge hit?
Right.
Is this one changing the world the way the first one did?
Also, the way they're selling them by like, these monthly installments. So mobile carrier charges, I think, play a factor into that as well.
All right, Ed and Gene, we'll let you both go. Thank you, Ed Lee and Gene Munster. We have some breaking news to get to on Celgene here. Meg, Terrell, what's happening there?
Hey, Kelly, Celgene stock is halted, and the news just came out. They say that they are discontinuing a phase 3 trial of a Crohn's disease drug, which is called GED 301. They say that's after a data monitoring committee assessed that the overall benefit risk was not worth continuing, essentially. They say there were no meaningful safety imbalances identified in the analysis. They also say at this time another phase 3 trial of that same drug, I believe, will not be initiated. They say they're looking to review the full data set as they make decisions about other clinical trials here, guys. But Celgene discontinuing this phase 3 trial in Crohn's disease after this analysis in the middle of the study, guys. Celgene is halted, and we'll bring you news on what the shares do when they reopen, Kelly.
Meg, is this more significant because Celgene needs new products or because of Crohn's disease and the need for treatments there?
Oh, this is certainly is a big part of Celgene's pipeline. They do say that they have other diseases in this area, essentially, but this one was one that people were excited about. And so looking to kind of dig in a little bit further and figure out how this affects their strategy.
All right, Meg, thank you. Of course, we'll be watching at 5 p.m. when those Celgene shares reopen. They are halted on that news. PayPal shares are surging, though, after reporting better than expected earnings. Up next, we'll debate whether you should pay up for the stock, which is up nearly 70% this year. Plus, Netflix is firing back at Nielsen for its plans to provide ratings for the streaming services shows. Our fast take on that is coming up. Big declines on Wall Street today. The Dow is down about 105 points at the lows, and we closed positive. Mike, here you go, 5.44 points, not 5.08.
Well, we were up, though, not down.
No, oh, I'm sorry. We closed higher by that. We were looking for some Black Monday parallels.
Pretty close, though.
But anyway, the S&P up less than a point there. That would be records for both the Dow and S&P, as you can see. And the NASDAQ down 19, and the small cap Russell's down 3 points today. Shares of PayPal are on the move after the company reported better than expected earnings just moments ago after the bell. Shares are up about 3%. The stock has been on a tear. It's up about 70% this year into the earnings report. Does PayPal have more room to run or not? Joining us are Brad Burning of Craig-Hallum Capital, who has a buy rating on the stock, along with Loop Capital's Joseph Vaffy, who has a hold rating. Welcome to you both. Brad, I'll just start with you. Make the case for PayPal after it's more than doubled in terms of its market value over the past year.
Yeah, we recently came out with a note with an $83 price target based on 2019, and we've been expecting that this strong net account growth that you saw, record 8 million accounts added this quarter, would come about because of the value proposition they provide to consumers, but also as well as you're actually seeing banks actually pay their customers to sign up for PayPal accounts. And so, clearly it's not about who's in your wallet, it's about who's first in the wallet, and the banks realize that, and that's helping drive the growth here. Lastly, the customer choice that they've had is cut down on customer attrition. So we continue to see the strong growth. It's accelerated well this quarter and is evident in the numbers.
All right, Joseph, what's the counterpoint?
Well, PayPal has clearly exploited the seam in the payments industry, but I think the way we look at the name is, we're focused on the P&L and the numbers here. And if you just look at the numbers that just printed today, really strong top-line growth of 22%. But it's a little sobering to see that the actual transaction expense, or in essence the costs associated with the transaction growth, grew 32%. So in essence, the growth is coming at lower margins versus the year ago period, and to a certain degree there's, at least for now, a little bit of hole in the bottom of the bucket in terms of the profitability coming from growth.
Okay, Michael, I'm looking here at the the market value of American Express, about $81.2 billion in PayPal, 80.9. So I'm assuming with the move that means it's actually PayPal is valued more highly than American Express. Does that make sense to you?
I guess you can make it make sense to say that PayPal really is probably addressing a bigger market if they stay right at the center of the payments world. American Express is really kind of fighting over, zero sum in terms of who owns and uses their cards. At some point, maybe that equation changes when it comes to PayPal. In fact, I'd be interested to ask the question, maybe to Brad. It's fascinating to see MasterCard, Visa, PayPal, First Data, even all these companies that are at different layers of the payments world, sometimes on top of one another, all thriving at the same time. I guess it leaves the question, is there enough to go around? Are they all going to maintain their position in this new world?
Yeah, no, it's a great question. Well, look, we're still in the early stages of cash and check transferring over to payments on plastic, and we're still extremely early in the game of payments transferring from plastic to mobile. This is just, we're in the stages of growth where it lifts all boats. We have a long ways to go on this. By our estimates, there's still over $2 trillion in cash spent by consumers in the United States alone, and we're far more developed in some of the other parts of the world. This is a global franchise. You guys are talking about it, whether it's expensive or not. And I think, look, if you look net of cash on this company, it trades at a PE that's actually in line with Visa and MasterCard, despite the higher growth, despite the stronger growth on the bottom line. And, look, the reason why, we're seeing top line growth be stronger and the transaction margin come down is because of the strong growth in Venmo, which has only begun to start to monetize going forward from here. So I don't see that as a sign of problems. We'll see the growth and that margin to rate of decline should start to improve going forward.
Granted, the banks are launching their own payment system here. Gentlemen, thank you very much for joining us, Brad Burning and Joseph Vaffey. Appreciate it. Talking PayPal. Let's send it over to Meg Terrell for a different earnings alert. Meg?
Hey, Kelly, we're looking at Skechers, a beat for the third quarter on earnings, coming in at 59 cents a share versus analyst estimates of 43 cents. Also a beat on revenue, coming in at $1.09 billion versus analyst average estimate of $1.07 billion. The Q4 EPS guidance looking maybe slightly conservative at 9 to 14 cents versus 12 cents estimate, but that not affecting the stock, up about 22% after hours. Kelly, back to you.
I got a lot of questions for you on Skechers, Meg. I want to know everything you know about this company.
They make shoes.
No.
Yeah.
Yeah, that's what I said. Thank you very much, Meg. Thank you. Huge move for Skechers there. Netflix taking a shot at Nielsen after the ratings tracking company said it developed a system to track Netflix streaming programs. What the video giant has to say about that, we will have next. Still ahead, Google and Facebook feeling the heat from Capitol reportedly influencing last year's election. What Congress is looking to do and what it could mean for investors, coming up.